On the program today, South Africa's unemployment rate rises to 30.1% in the first quarter. Bankers warn debt forgiveness will hurt rather than help Africa. And British Supreme Court hears Nigeria's case in Shell oil spill claim. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. First, the markets. The Johannesburg Stock Exchange Index cared less about the gloomy unemployment rate data released this morning to trade higher by 2.05% at intraday. South Africa's unemployment rate rose to 30.1% in the first quarter of 2020 from 29.1% in the final quarter of last year. Here in Nigeria, the index was in the red, down 0.18%. Egypt was up 0.05%, and Kenya closed down 0.23% on Monday. And the Middle East markets were all in the green at intraday, led by Dubai Financial Market. Dubai index was up 1.42%. Abu Dhabi was up 0.63%. Qatar also traded in the positive, up marginally, while Saudi was up 0.05%. In Europe, stocks advanced this morning despite some concerns over the state of the U.S.-China trade deal and a surge of coronavirus cases in the U.S. and elsewhere. There are also other stories making rounds in the market, and Chelsea will update us. Hello, Chelsea. Good afternoon. Well, the CEO of embattled German financial tech firm Wirecard was arrested on Monday amid a widening scandal over the company's accounting practices. What's the latest?
I don't know if I should.
Hello, Chelsea. If you can hear me, what's the latest on the CEO's arrest, the Wirecard CEO's arrest? Okay, we'll get back to Chelsea as soon as we're able to rectify that technical issues there. UK factories have returned to growth this month as the COVID-19 recession eases. The flash manufacturing PMI, which tracks activity across the sector, jumped to 50.1 this month from 40.7 in May. Crucially, that's just above 50-point mark, showing stagnation. But let's see how the markets are chewing the numbers. Juliana joins us now. Hello, Juliana. Good afternoon. Well, the PMI numbers were released this morning. How much has that data driven sentiment in the markets today?
Good morning, Chimeze. Good afternoon, Chimeze. It has really driven sentiment on the markets. There was a rally, not just on the all-share, but actually pushed up sterling and also pushed up the all-share. At intraday, the all-share is still up by 1.16%. The FTSE 100 is up by over 1%, and the FTSE 250 is up by 0.87%. In currencies, the British pound is down on the dollar by 0.06%, down on the euro by 0.30%, and up on the Japanese yen by 0.12%. It's worth pointing out that even though this did really boost economic sentiment and the fact that it's kind of solidified what Andrew Bailey, the Bank of England governor, was saying last week, that the UK is on the road to recovery and we may see growth return in the third quarter, there are still some concerns about the long-term recovery, particularly considering we have so many big companies like the airline groups axing thousands and thousands of jobs, even though some of their staff are still being furloughed. So when that does finally taper out in October, will people keep their jobs and will there be enough money in people's pockets to go out and start spending? I should also just say as well that we did just have some breaking news here in Britain. There was speculation that the hospitality industry would be opening on the 4th of July, but now Prime Minister Boris Johnson has just declared that in the House of Commons. He's still on the dispatch box taking questions from a cross-section of MPs, but this is great news, and obviously the FTSE reacted to that because Britain is a service-based industry, and finally it almost feels as if the final stage of lockdown is being lifted. However, there were no updates on nail spas and nail salons, so my nails will be looking like this for a couple more weeks, Chimmy.
And Into Properties, one of Britain's largest shopping centre owner, has appointed the accountancy firm KPMG as administrator to make a contingency plan if it cannot reach an agreement with its creditors. Is Into in trouble now?
It is in trouble, and it's been in trouble for at least a couple of months before the pandemic. It's in heavy debt, and it's struggling to revamp its sites. As you said, it is the biggest shopping centre outlet in the UK. They have about 13 shopping centres, including quite a famous one, which is Lakeside, and also the Trafford Centre in Manchester, and 3 other outlets in Spain. Now, like I said, they were having trouble before that. Then the pandemic hit, and of course, all of the stores within the department store were closed, and there were so many holidays that were being entitled by the government, so they were not receiving rent. Their debt relief is due to expire on Friday, and they have been in talk with lenders, and they're hoping that that can be extended, the payback could be extended for another 15 months, but they're not certain of that, so they have pulled in KPMG, one of the big 4 accountancy firms, to help them do an audit, and really that's seen as a contingency just in case lenders don't agree to their plans. So they have warned some of the stores that if indeed that does happen, then they may be closed for some time. So pretty worrying, considering it affects so many stores and of course thousands of jobs.
And are there other company news of interest to the markets today?
One that's just broken a couple of minutes ago is about Shoe Zone, which is a pretty popular kind of low-level or cheaper shoe retailer. Shoe Zone, they're closing 20 stores. They've just announced that they're cutting head office jobs. Of course, last week, Monday, non-essential stores were open. Not all of them are open, even though some of the major ones are. Some just couldn't survive and have decided to keep their shutters closed or delay it. And Shoe Zone have become one of them that has said that it's just going to be impossible for them to open all of the stores because some of them are not profitable. So they just made that announcement. And of course, the big one is about the hospitality sector. During the Prime Minister's dispatch box questions, a lot of MPs were asking the Prime Minister to join them in their local constituency for a pint, as they call it here in Britain. And there were even choruses of hallelujah by MPs as soon as Boris Johnson said pubs will open. Of course, I'm sure you know, Chimmy, pubs are pretty much the bread and butter of Britain's social engagement. So there's lots of a round of applause and happy. And I suspect tomorrow a lot of the leaders for the FTSE 100 will be those hospitality owners.
We'll watch and see how that plays out tomorrow. Let's give it time on that. Thank you, Juliana. All right, we'll move back to Europe now, where Chelsea Dulani is standing by at the Frankfurt Stock Exchange to update us on what's happening at the markets there. Hello, Chelsea. Good afternoon. Well, the CEO of embattled German financial tech firm Wirecard was arrested on Monday amid a widening scandal over the company's accounting practices. What's the latest?
Well, it's been a really just stunning turn of events. Wirecard has really been the poster child here in Germany for tech and for sort of these more modern companies. And it really rose very fast and grew quite big quite quickly. In the past week, we've just seen this completely unravel. Just to walk you sort of through the timeline, these allegations that Wirecard had been inflating its results, had been inflating revenues and profits and things like that. They have been dogging the company for more than a year now, but this all really came to a head last Thursday whenever the company said that it couldn't locate 1.9 billion euros that should have been in accounts in banks in the Philippines. So that happened on Thursday. On Friday, the CEO, Marcus Braun, resigned, and today, or on Monday, he was arrested in Munich. So this is all coming very, very quickly. But what we've heard from the Munich prosecutors is that they're looking basically at most parts of the business. So it's going to be a very wide-ranging investigation into the company and potential accounting fraud, potential market manipulation. They are saying that they suspect that he was involved in in inflating the company's revenue and the company's financial results. So all of that is likely to play out as we go forward. But it's likely not just going to be the CEO either. There are several other executives at the company who are being investigated for other offenses. They could also get wrapped up into this as well. So there's a lot more to come on this very dramatic scandal here in Germany.
And auto sales in Europe is expected to tumble 25% this year due to coronavirus. Which companies will be hardest hit?
All companies in Europe, all of the big European automakers are really struggling right now with the coronavirus effects. We saw almost every automaker report double-digit, almost an entire halt in their businesses in April and May. They are recovering a bit now. We've seen companies like Volkswagen restart their production. They have their showrooms back open, but it is going to be a very, very difficult road forward for a lot of these automakers, especially given the fact that the industry already was preparing for a pretty monumental change as they shift towards electric vehicles. That was already going to be very expensive. Now they're facing a quarter of their business just disappearing in 1 year. That has raised the question of how they're going to survive without government help. So we've seen a lot of companies asking for government help. Here in Germany, the auto sector did ask for government support. They didn't get it in the latest stimulus bill, but France, the UK have made more overtures to helping the auto industry because this level of decline is just unsustainable for the companies.
And on data front, economic activity in France and Germany both rose more than expected in June as lockdown restrictions continue to be lifted. How are investors reacting?
Oh, yeah.
Well, I guess we've lost Chelsea there, one of those things. Stocks in Asia Pacific were higher today following a turbulent session as White House advisor Peter Navarro clarified that the U.S.-China trade deal is not over. Hong Kong's Hang Seng Index led gains among the region's major markets as it rose 1.62% to close at 24,907.34. Mainland Chinese stocks were higher on the day, with the Shanghai Composite up 0.18% to around 2,970 points, while the Shenzhen component rose 0.82%. In Japan, the Nikkei 225 rose 0.5% to close at 22,549 points, while the Topix Index added 0.51% to finish its trading day at 1,587.14. South Korea's Kospi also gained 0.21% to close at 2,131 points. Meanwhile, the S&P ASX 200 in Australia closed 0.17%. Overall, the MSCI Asia ex-Japan Index added 0.96%. And U.S. stock futures recovered from earlier losses to trade higher early this morning after White House trade advisor Peter Navarro clarified that the U.S.-China trade deal is not over. The Dow Jones Industrial Average Futures implied an opening gain of nearly 300 points. S&P 500 and Nasdaq futures also pointed to a positive open. President Donald Trump also tweeted that the existing trade deal remains in place. New home sales data from May will be released later this morning. And oil price fluctuating in volatile trading session today following comments made earlier by White House trade advisor, which suggests that U.S. trade negotiations with China was over. Global price benchmark Brent crude rebounded by 1.43% to $43.76 a barrel after earlier hitting a session low of $42.21, while U.S. West Texas Intermediate crude climbed by 1.67% to $41.40 a barrel, having dropped to a low of $39.76. And away from the markets there, UK's Supreme Court is today expected to hear a case against Royal Shell over oil spillage, which have polluted land and water in the Niger Delta. The appeal reopens the possibility for British multinationals to held liable at home for their subsidiaries' actions abroad. This comes after a setback in 2018 when a London court ruled that the claim could not be pursued in England. Meanwhile, Shell's local subsidiary argues that claims by communities against an indigenous company about local events should be heard in the country and not the UK. And still to come on the program, bankers say Africa should be mindful of asking for debt cancellation. This plus the commodities market update after the break. The call for debt cancellation by African nations will only come back to haunt them. That's according to the Group Managing Director and Chief Executive Officer of the Pan-African lender Ecobank Transnational Incorporated, Mr. Ade Ayemi. Mr. Ayemi, who made this known in an interview at the Bloomberg Invest Global Virtual Conference on Monday, warned against the idea of seeking debt cancellation from multilateral financial institutions and some developed countries as it could distort markets on the continent. His view was also corroborated by the Chief Executive Officer of Kenya's largest bank, Equity Group Holdings, James Mwangi, who warned that the call for debt forgiveness by African debtor countries will have unintended consequences. African finance ministers in April had asked for debt relief from multilateral institutions such as the International Monetary Fund, World Bank, and as well as the G20 amid the coronavirus crisis. And the global demand for prawns and shrimps is projected to increase by 3% annually. This is due to high consumption in the US, Europe, and Japan. The Nigerian coastal waters and territorial shelf is endowed with an abundant supply of shrimps, but its catch is only a meager 12,000 tons annually. That's about 0.25% of global production. Now, to talk more on this is Dumebi Iyeke, one of the research analysts with Financial Derivatives Company. Hello, Dumebi. Good afternoon.
Hi, Chimezie. Good afternoon.
Now, despite Nigeria's abundance in shrimp supply, its catch is very little. What is responsible for this, and what lessons can Nigeria learn from the leading producers in the world like China, India, and Thailand?
I mean, from the overview of the global market for shrimps and prawns, we're seeing that the increase in consumption is as a result of an increased shift in consumption pattern of consumers towards a more organic way of eating. So people are moving towards healthier options than fast foods, and that's why we're seeing the increased demand for shrimps, and that's because shrimps is high in protein and vitamins. So apart from that, there's also the fact that shrimps is a seafood, and food poisoning is largely, affected, or is largely gotten from seafood, and amongst other issues. So these are some of the issues this is just one of the issues that's affecting the supply of shrimp in Nigeria, and this is on the consumption part. But most importantly are the issues that are affecting production and supply, and those some of them are the environmental pollution in one of the most dominant areas where shrimp is gotten from in the country. Then we look at the high cost of entering into the shrimp industry. We look at also the fact that shrimp trawling and prawn trawling requires a lot of skill, and some of the farmers or fishermen that are into this industry are not exactly they don't have the required skill or the required knowledge to do this at a very large scale. And then we also look at investment in this particular industry. So the lessons Nigeria can learn from advanced countries or countries that are into this production on a very large scale are, number one, research and development in this particular industry requires a lot of knowledge, requires a lot of research, and requires a lot of development. Then we also look at investment in this particular industry in terms of the machineries that are involved in making sure that the process is smooth and is easy for farmers or fishermen in this particular industry. Then we also look at we also look into the value added chain for shrimp and prawns. For example, the shell of shrimps can be used for animal feeds, and shrimps and prawns can also be used as food supplements. So some of these countries are already venturing into this particular area. So these are some of the things that Nigeria could learn and can learn from other top producing countries.
Now, the Nigerian government is looking to diversify its revenue sources with the global demand for shrimps on the rise. Do you think Nigeria can successfully participate in the global market for the commodity and, of course, increase its export earnings from frozen shrimps and prawns?
I mean, in the past, we saw that frozen shrimp and prawns, was the third largest agricultural traded commodity for Nigeria in terms of exports. And currently, Nigeria is earning about 1.8 billion naira from shrimp exports. So the market for shrimp is one that Nigeria could actually, successfully participate in. When we look at the value for the shrimp, for the global shrimp market, which is about $18 billion, and shrimp demand, global shrimp demand is about 4.8 million metric tons. And even though Nigeria is still producing about 12,000 tons, the potential actually for Nigeria stands at about 80,000 metric tons, and the value in itself is about $300 million Nigeria could earn from this particular industry in terms of exports, and create about 50,000 jobs, and the shrimp is projected to, the industry itself is projected to increase by about 25%. So yes, Nigeria could actually successfully participate in this industry once the country, begins to address the factors that are impeding this particular industry, especially in the area where it is found dominantly.
Now, you talked about the restiveness in the Niger Delta area. So how is it possible to improve the shrimp catch to commercial proportions, when you are confronted with some of these dysfunctional activities?
I mean, every action begets a reaction. So what we're seeing in Niger Delta, sorry, is as a result of so many things that have, affected that region over the years. And, for example, right now there is the issue on the oil spillage, and fact that there's unemployment in that region. There is marginalization of communities that are within the coastal shelf and the territorial waters for the region. So all of these issues put together have affected the youths in that area, and the possible growth in that region. And once these issues are, addressed, and these issues are looked into, we can then see a possible, turnaround in Niger Delta, and a possible increase in shrimp production. But the major thing to focus on right now is the issues that are impeding shrimp production in that region. The major issues that are causing the youth restiveness and other issues that are rampant in the region.
All right, thank you very much, Dumebi, for updating us on that. Dumebi Yeke is one of the research analysts with Financial Derivatives Company.
Thank you.
Well, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwagu.